Let's talk about the new proposal for no tax on tips. The House Ways and Means Committee has put forward a draft bill outlining what their recommendation is for the no tax on tips offer. In this video, I'm going to break that down into what it means. First of all, it is a deduction on your taxes. So this would be in the form of a reduction once you've had your adjusted gross income calculated. You can still make this deduction even if you do not itemize your deductions. So it's still good and still reduces it. The second thing is the tips that you deduct have to be reported as income. So it's not merely you can stick these in your pocket. You need to report them as income. And when they're reported as income, that means they're reported on your W-2, your 1099. It's going to be reported on the Form 4137 that a taxpayer may submit to report tips not reported to an employer. But they have to be reported. So you're reporting the income, and then you're deducting or subtracting it off, if you will. So there's no tax on it. That being said, what is a qualified tip? A tip is, and this is very interesting because a lot of people thought they could drive a Mack truck through this loophole. So listen to this. A qualified tip is one that is received in the normal course of a trade or business. It would be the type of occupation that an individual is engaged in, which would traditionally and customarily receive tips. So who would that be? Basically people in the service industry, waiters, cab drivers, people who provide, bellhops, these sorts of services. So you just can't all of a sudden decide that, you run a paint store and you're going to reclassify part of your income as tips. That would not be customary or traditional. So that would not qualify as a tip that could be deducted. Another very key limitation is that this no tax on tips is restricted to people who are not considered by the IRS as highly compensated individuals. A highly compensated individual is someone who makes over $80,000 a year, is a 5% owner of a company, or one of the top 20 employees as ranked by compensation. So this is definitely going to disappear if you are making a lot of money. The next interesting element is this is a retroactive proposal, which means it starts as of the beginning of 2025. And here's an interesting wrinkle. There's a couple of these in the tax bill. This proposal goes away at the end of 2028. Now think about that. It's only a 4-year period. Guess what? That coincides with a presidential reelection. So I see this as a gambit by the Republicans to make this an election year issue, that if you don't vote Republican, then the Democrats are going to take away your tips and you're going to be taxed on all that. So you can see how that plays out. The next element of it is the payroll taxes still apply to tips. What does that mean? Payroll taxes, our Social Security and Medicare tax, still apply to these tips. Now, the tax rate for that is half the normal percentage on income, roughly a little over 7% of your tax rate on that. Now, of course, Social Security and Medicare are things that you get to receive later on in life. So it's kind of like paying forward. You might be tempted to not report your tips, but if you don't report your tips, then your overall income is lower than if you had reported it. And that will affect your Social Security distribution, which is calculated based on how much you made per year up through age 60. So there is kind of an incentive there to include it, especially if you're under the $80,000 highly compensated employee rule. Also, will a bonus apply for tip? No, because a bonus is not a tip. So this is something that is going to be very interesting. It's very much an incentive to help stimulate the economy and stimulate people working more. That's the no tax on tips bill. Do you think it will be approved? Let us know in the comments below. If you enjoyed this video, please like, subscribe, and follow. We appreciate your comments very much. Have a great day.